Hello everyone, how are you all? Hope you are doing good and I'm good as always. Let's just start with the my WhatsApp is let's start with the with chapter 2 unit 4 which is subsidiary books. Okay, where is that? Actually okay, anyway, subsidiary books. What do you mean by subsidiary book? Check this. Principal books are of two. There are two principal books. Ledgers like purchase account, sales account, uh, debtors account, creditors account, etc. Capital account, and then cash books, which we are going to study in the next chapter, next unit, which is unit 5. It is only about cash book we are going to cover in this video itself. And then there are subsidiary books. What do you mean by subsidiary book? I mean, actually, these are the like, how can you say? These are, let me put this in another way. These, for example, there are 10 purchases, 5 purchases, okay, from Krishna. So I sold 10, 5 separate goods. Purchase day book tells about this. Here, purchase account, purchase ledger tells about 5 quantity at the rate 10 rupees each. Each is 10 rupees. Okay, so 50. This is what purchase accounts in ledger tells you about. And in purchases daybook and sales daybook, they kind of elaborate. Subsidiary books are of 7 types. I will tell you about it later. In businesses, most of the transactions generally relate to receipts and payments of cash, sale of goods, and their purchase. It is convenient to keep separate register for each class of transactions. One for receipts, one for payments of cash. Basically, they are trying to say it is better and it is convenient to maintain separate books of accounts like purchases for sales for purchase returns. These are the list I'm going to make you remember and you're going to love it. And one for the sale of goods. A register of this type is called book of original entry of or of prime entry. Okay. Let's cover the theory later. Okay. I'll just explain you how it works. Advantage, this might be important, but we are going to cover later in the theory part. Maybe I'll take theory marathon of around 10 hours for the entire syllabus, including chapter 1. I will, that chapter 1 was my first initial phases of this session. So I'll try to explain you in a better way. I will keep on updating myself. Distinction between subsidiary and principal books. What are principal books? Lectures and cash book. Oh, okay. There are differences. The books in which transactions are first recorded to enable further processing. Transactions that are first recorded to enable processing is called subsidiary books. Like for example, you purchased 5 items from me. So we enter in purchase day book, right? I will talk about format everything later. The ledger and the cash book are of principal books since they furnish information for preparation of trial balance and financial statements. Do you think investors are really keen about how many times I sold goods to you? No. Investors are mostly keen about the amount, the ultimate balance that is lying so that they can better analyze whether the company they are investing into are uh, what do you say repaying properly or not. to me, repaying to me, since I am the seller and you are the purchaser. Ah, books of accounts of financial statements. Oh, sorry. Books of accounts of financial statements. The books of accounts are of two types: principal books, subsidiary books. Principal books, there are two principal books, lectures and cash books. Subsidiary books include, now this is the interesting part, okay? There are seven subsidiary books. Just close your eyes and these kind of books are not unknown to you. First one, why do we business? For profits. How do we earn profits? By selling. Through selling goods or services. First, sales. How do you sell? By purchasing. Are we positive? No. I mean, if there are sales, there are sale returns. And if there are purchases, there are purchase returns. Oh my God, four books have come here. Sales, purchases. Sales returns, purchase returns. There are two new concepts, bills receivable, bills payable. Just keep this in mind. And then there is one another thing, journal proper. These are the seven books. First four books are sale, sale return, purchase return, bills receivable, and bills receivable, bills payable, and then journal proper. This is more like miscellaneous, like closing entries are bifurcated here, etc. Yes, I'm right. Okay. So these are the attributes of each book. I mean, you can just uh, read the theory or you can understand the logic from here itself. Just keep writing this, okay? Please do not, if I'm too fast, if I'm skipping this, just to pause the video and note these points, okay? Also, thank you for subscribing, whoever subscribed, and thank you. And if you mind, please comment me below on the way I'm teaching, so that the time is 1:35 a.m. Okay, so that it modes my, sorry, I'm stuttering, so that it motivates me. Okay, it really does motivate me because you know uh, it helps me feel good, because it's not that I'm doing for free, I'm doing for charity. I'm expecting something like consideration, some a little acknowledgement, like you did well or you did not do well. You are taking so much time for classes. Just a mere interaction. A mere interaction would be really good. I feel better. Okay. Anyway, let's not waste time here because we'll discuss about these my problems later, post your exams. So basically, what do you record in purchase book? Okay, we will solve in the problem. I will teach you in the problems. This is the format, okay? Basically, the format is very simple. Close your eyes. For any kind of format, there is a date. In chapter 2, remember, in chapter 2, for any kind of format, first thing is date. Second, particulars. These two are common. Third one is amount. In general, I'm talking, not here. And if it is journal entries, debit or credit, and ledger folio. If it is ledger, journal folio with debit, and then it is T-form. All right. Here we have a new column or row, whatever you call it. This thing, new column, details. Basically, date, particulars, okay, and and then details, and then amount. Sir, what do you mean by details? We already have the amount here. Why do we need details? For calculation purpose? You'll just know about it later. So it's time for me to make the big reveal. I am Bahubali. So, okay, bad joke. I'm sorry. So, for purchases, only record credit purchases, which means we are excluding two things. Excludes cash purchases and asset purchases. Remember, the same logic applies to sales also. From purchase, you just put the word sale. Okay. So we understood the logic of this and this. Basically, we for purchases and sales, we only and only include credit purchases. Other than credit purchase, we do not include or consider anything. Keep this in mind. So basically, I solved this. Okay. So the rough book of so and so contains. Wait, Let me check whether this video. Uh, where are we? Yes, here. So and so contains the following. First, purchased. Okay, from Brown and Co. on credit. Brownie is my dog's name. Not exactly my own dog. It is stray dog. We are taking care of her. So there are two things here. Let me just show you the format. First one, you write date. Okay. First one, so and so. Write the name of the creditor, and then just write as it is a transaction. Okay. Five pencils of 100 rupees each. Five pencils of 100 rupees each. Five into 100 is 500. One register of 240 per dozen. Keep this in mind. One register of 240 rupees per dozen. So 240 into 12 comes here. Okay. 240 into 12 comes here. Less trade discount. Trade discount comes last. I mean, based on the total subtotal, you subtract 10% of the subtotal, and this is the amount. Okay. Now, the second point. Purchased for cash. Oh my God, cancel this. Purchased computer. What do you mean computer? It is an asset. Cancel this. Purchased on credit. Oh my God, we should recognize from the paper company. What should we do? First, write a date. So and so. Okay, February, right? Second, paper company. Third, five reams of white paper at the rate 100 per ream. 500. Fourth, 10 reams 10 at the rate 150, 1500. Less total is 2000. Less trade discount at the rate 10%, 200. The total is 1800. The answer should be 1800, right? Yes. And third, fifth, we are done till here. If you want me, just a comment me below. I will try to go as slow as possible. Since there is a time constraint, I'm making a bit faster. Purchased 1 dozen of gels at the rate 15 rupees from Mr. Verma. So what do you say? First write the name. Verma and Bros. Uh, 1 dozen blah blah at the rate 15 per pen. So 15 into 12. Remember the number 12 dozen means 12. Okay. Dozen means 12. In South, in my state, we purchase bananas by way of quantification. The quantification is dozen. We do not buy bananas based on kgs or liters. I'm sorry. So this is it. Basically 180, 180. This is the total 304 to 1800, 180. This is how we do it. And illustration 2 is format based. There is some twist here. Basically, this is the portion we have studied till now. If you do not want to do the format, just to do the way I did. But this is ICI. We cannot guarantee marks. But they check like how do you say? Mostly they check for numbers. Okay, numbers and balances. Somehow they might cut you marks. So you have to remember this format for this specific question. If not, even if you do not consider this, the way we did in the previous question, it works in general. But it is not that tough. Okay, just because I said it is difficult doesn't mean it is. Okay, the first question is just write the way we did in the previous. Okay, what do you do? What should you do? Even for the practicing, just write what we did in the based the way we did in the first problem. Purchases so on so so on so. Here dozen is the unit of measurement, so you do not have to multiply every time into 12. Since dozen is the unit of measurement everywhere. Okay. 100 Rexona Chapel at the rate at 120. Okay. At this 200 purchased from, okay, not cash. They did not mention cash. 200 so on so at the rate 300. Okay. Note this. Less trade discount 10%. And the freight charges. Freight charge is an expense. When you purchase something, when the seller gives, like, how do you put it in words? Delivers you to your location, they do not they charge you, right? They do not pay on their own. They do not use their money, their own money. They charge you. So freight is there to charge. So freight is to be added. Okay, just you might add it here freight, and then total would be okay. Okay, let it be. Or I will just explain you the first point, and you might understand it. So basically, there is 1 minute. Basically, there is details and amount, right? Here, this instead of considering net amount, they considered gross amount. So what do you mean by gross? Gross is the amount which is raw, which is not refined. So we reduce trade discount, which is here. Okay. And then this is the net price. And then we add freight. Okay. We could do it like this, but they have done like this. Just that's the base concept. This is not something ridiculously new. I will just tell you again. Purchased from so on. So 50 into 400, 100 into 140. This is the gross total. Whatever the amount comes is the gross total. Less. Here there is trade discount, right? 10%. The gross amount into 10% is this. And then 34,000 minus discount. We should reduce. Okay, keep this in mind. Equal to this is the balance. And then the freight is given in the question itself. Freight is 200. That's it, simple. For the another third one. Purchase from so on so. 40 pays into 400. 100 dozens into 180. Less. Okay. This is gross amount. Okay. And then, we, in the trade discount column, we do 10%. And and then net amount or net price. Then we add freight that equal to total amount. That is what we did. In freight, we add this. In trade discount we subtract this amount. That is what they have done. Did they ask for post them in ledger, right? Just to open the purchase account, which is debit balance, and freight account, which is also expense and debit balance. He is the creditor, so credit balance. Balaji is also creditor. Tripathi is also creditor. Okay. Basically, basically the journal entry is purchase account debit to the total amount. What is the total amount? Total of this and this and this. Basically, they said purchases account debit to Lavanya Tripathi to Balaji to another blah blah. Okay, this is the journal entry. In Lavanya Tripathi account, buy purchases Lavanya Tripathi balance. What is it? 30,600. This is the balance. Okay, animal movie heroine. Okay, this is the balance. Why did we bifurcate? Maybe this might be the reason. Okay, for in order to find net price and net price and I forgot to calculate freight. Okay, they have asked for ledger accounts, which could be the reason so that in ledger you do not add freight. Freight is another expense. It is not considered sub purchases. Posting, where it be. Facebook also same format and the same concept as it is. Following are the transactions of so on so. Credit. Keep this in mind. Credit is the most important. If it is cash or asset, just cross this. We hate cash. We hate assets. We only want bad things. Um, We only prefer bad things. Okay. Basically, write Gupta and so on. So 30 into 800, 20 into 1000 minus 10%. 30 into 800, 20 into 1000 minus 10%. Okay. If you want, you can add this number. Sales as per the invoice number. Sir, what do you mean by invoice? Invoice is a document. Basically, whenever you go to shop to purchase a book or a no, no, to purchase laptop, they give you invoice. What do you mean by invoice? It is the acknowledgement that you have purchased. It helps in claiming warranty. There are many things. For GST invoice is the heart and soul. Okay, we and okay, let's keep GST aside. GST is not love. Sold furniture, cut. Sold 50 shares of 800, add. Not to people, not on cash. Sold 13 shares for cash, cut. Sold on credit, add. 100 into 750, 10 into 5000 minus 10%. This is the third illustration. I mean, I could have practiced or written with you so that it could have been very slow and you not be running behind me to catch up, but the time is the main constraint here. If you want, please comment me below for any question or any concept for any doubt so that I will refer and tell you the solution for that. And then there is sales return book, purchase return book. What is the sales account? Sales is a credit balance. Sales return is debit balance, right? Again, I will explain to you, even if you are bored, because it is the most important thing. Profit and loss, and then balance sheet. And now we are going to hate these two. So all expenses all incomes, uh, capital, liability, and assets. Since we hate these two, expenses, wait, I will just please keep on repeating, keep writing this. Okay, you should not forget this till your CA degree. All debit balances, all expenses and assets, credit balances, all incomes, capital, and liabilities. So, sales is a representation of income. Sales return is opposite to sales. So, debit balance, which is obviously okay. Sales return is written in word. Purchase return is written outward. Purchase is a debit balance. Purchase return is credit balance. I hope you have understood the concept or the logic. Written outward is purchase return. Whenever we return and something that goes out is written outward. Again, I'm telling you, whenever we purchase something, like for example, you have, you sold me this pen, you sold me, 1 minute, you sold this pen to me, right? And I did not like it. So I do not like it. So I'm going to return it to you, which means return outwards. Okay, the return outwards. If it is reverse, I sold you this pen because I love this pen, but you just hate it. You just return to me. So return inwards, right? Do not get confused. Return outwards means return outwards. The same format, date, particulars, details, amount. This is that same bullshit. Oh, this is a question I forgot. Course of online. They have given us the written outward book. I forgot. I don't know whether I have checked. Okay, I did apparently. So they have given dates, trade discount, and modern electric company. What did they ask from us? Prepare the lecture account. So what are the lectures here? Wait a minute. Rajendra Prakash instance, he must be the creditor. Why is he the creditor? That is a fantastic question. Because when we purchase something, Rajendra, me, I purchased something from him. Now I'm going to return that thing. He is the creditor for me since I have purchased, right? Now I'm going to return it, which is why it is written outwards, right? Nickel, let's not dwell too much here. I guess you must have understood the concept. Ceiling fan, 200 rupees. Date discount, 20 rupees. Modern electric family should also be the creditor. Okay. So there are two creditors, modern electric company and so on. So the point is written outward. What is the journal entry? Uh, Creditor to purchase returns, I guess. Creditor account debit to purchase returns. Creditor account debit to purchase returns. Return outwards is just a reverse the entry to the creditors. I mean, by the creditors, okay, sundry creditors. I'm sorry, not to here. And then there are bills receivable, bills payable. This is very little concept. If the firm usually receives a number of promissory notes, what do you mean by promissory notes, sir, in this? We'll talk about this in the sixth chapter, which is almost near the climax. Okay. It would be convenient to record the transaction in a separate book called bills receivable book. Basically, if we receive promissory notes, too many, just maintain a book. I mean, okay, you must have understood the concept. And vice versa is bills payable. If you issue too many promissory notes, Like, if you issue too many promissory notes, just to maintain this payable book, it will be convenient for us. And importance of journal we'll talk about. Okay, it is very easy. Cash transactions are recording cash book, which is in the next unit. Credit purchases, credit purchase of goods are recorded in credit purchase book. Credit sales in sales book. Returns from customers are in sales return. Return to suppliers are in purchase return. Basically, they are saying purchases, sales, purchase return, sales return. These are recorded here. Cash is not recorded here because cash is recorded in cash book. What is cash book? It is a principal book. If you remember in the starting of the chapter unit, right? I think I'm going to first. If you remember in the beginning of this unit, there are two kinds of books of accounts for preparation of financial statements. First type is subsidiary, no, lectures and cash books. Second type is subsidiary books. And we are discussing that subsidiary books, those subsidiary books. We'll discuss this in theory marathon. Just comment me below whether you want to watch theory marathon from me. Calling that a prepare purchase returns book of alpha so and so returned to so and so 5 into 1,000. Okay, done. It is cash. Remember this. Accepted the goods. Okay. No, okay, I'm sorry. I'm just frustrated because of cash. Returned one computer. Remember, assets are not considered. Cash is not considered. Only credit purchase or sales are considered. Remember this. Okay. Just uh, if you remember, if I understand and remember this concept, just 5 to 10 minutes of revision is enough for you, right? Yeah, basically, okay, 5 into 100, 5,000, 5 into 2,600, 13,000 are added. My God, that the unit is done. Is it really that easy? It is not. I just made it easy. Okay, I'm just making fun of myself. Enter the following transactions in the sales book. Okay, sold something, so on so each less. Okay, it is not cash. It must be credit. Okay, 5 into 6,000 minus 10%. Sold goes to so on so 10 into 8,000 minus 5%. Right. Sold goes to Haryana traders 5 into 3,500 minus 10,000. Right. 3 are added. Basically, what I have done here is whenever you get closer to the exam, you do not get time to practice. Okay. Oh my God, I'm sorry. You do not get time to practice. Okay. So always keep in mind, try to practice the way as scribbling method. This is well, as simple as possible. Just before the exam, whenever you go through this question, just be like, so the goes to, okay, 5 into 6,000 goes to 10 into 8,000, 3,500 into 5 minus 10% minus 5% minus 10%. Whatever is the answer, use the m plus. I will teach you how to use the calculator on the friend account, and then balance comes. This is how you can do it. Okay, so that you save a lot of time. Formatting is something you do not consider just before the exam. Keep this in mind. Whenever, okay, here's the hack. I just understood the logic. Whenever they ask, whenever they ask subsidiary books, purchase returns or sales returns plus lecture preparation. Then we do Horizontal format. What is that? Just remember date, particulars, gross amount. Oh, first details, gross amount, trade discount, net amount. And then if there is, what do you say, there is something freight, and then total net amount. Okay, this is the format follow. Why? Because in the ledger balances, we consider this amount. Net price, we consider this amount. Okay. For CA Foundation, please prepare formats. Please follow the format. Okay. This is very important for you. And do you want me to explain ledgers? No, I don't think so because sales, is it sales? Yes, sales. Data, account data to sales. Why data account? Whenever you sell something, selling is income for us. So it is credited. Okay, selling is sales are credited. Why do we debit something? Either they pay. Why do you sell? You sell for cash. You sell to the debtor so that he pays cash along with the interest, right? So again, sorry. So debtor account data to sales. Why do we do this? Because debtor is an asset. Asset has debit balance. Remember, debtor is an asset. We will understand and get clearer with the accounts, which account comes where in the final account, so that this chapter 2 will be very easy for you. The logic, and it will be helpful for you in CA inter also. And where are we? Okay. Debtor is a debit balance. Why? Because it is an asset, right? Since debtor is an asset and since it is of debit balance, we are going to debit the debtor in order to increase the balance so that he pays us more later on. Why does he pay us more? Because he purchased something from us. It is the simple logic. Okay, data account data to sales, data account data to sales. Sales account is created by the debtors. Sales account is credited by the debtors. This is the logic in the chapter is done. Where did I learn the word? From Shubham case one is my favorite. And unit 5 cash book. I guess we'll take a little break here. How much is the time? 38 minutes. I'll just